Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of March 3rd through 7th. The following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So, make sure to join us if that is something that truly aligns to your trading goals. Take a look down at the description box below to start that trading journey with us. With that, let's get into the market. So last week was quite a hectic week, as for most part, it was just a downtrending week. And this comes right after the February OPEX date on February 21st. And we were able to hit two major targets since that OPEX day. So we hit the level $600, the psychological whole number level here on the S&P 500. And then we also hit $585 on Thursday and on Friday, where we saw a little bit of an overshoot to the downside until we quickly pivoted away and closed into highs. So if you take a look at the weekly time frame, there is something interesting because it seems like the price wants to continue, or at least the bullish group wants to hold on to this 585 level for the time being. And I do like the fact on the weekly time frame, we tried to close over the weekly 21 SMA, which has begun to hug very close to the price. So again, the closing price last week was 594.18, and the closing price on the 21 SMA on the weekly time frame was 594.23. So only a few cents off. Now, I also like the fact that on the weekly time frame here, we are seeing kind of a similar downtrend that we saw back in early December or mid-December all the way to early to mid-January. And I mentioned this in one of my videos, so make sure you guys go back to the videos, a couple of videos back on this channel. So we had this kind of a pretty textbook correction of negative 5.50% from that mid-December to around mid-January, and we're sort of playing the same pattern here. So if you take a look at this weekly candlestick and take a look at last week's candlestick, we have a pretty nice looking lower wick or bottom wick here, or bottom shadow on this weekly candlestick, and it seems like the price wants to continue to reverse to the upside, which is why for this week I strongly feel that we can have a retest of the $600 psychological level, since it is a magnet level, as the price has literally gone nowhere essentially since November of last year. And so with this complete whipsaw back and forth, up and down, it would make sense for prices to come back up to $600 and then reject down and eventually have that complete washout of buyers once again as sellers retake control to the downside as we head into March's OPEX date. And again, I've given you guys full data, full information, and analysis on the period between February OPEX and March OPEX. So make sure you guys go back to the actual reports that you guys should be reading first before you watch any of these technical analysis videos. All right, so with that being said, I want to take a look at the RSI as well on the daily time frame perspective. So obviously, last Friday, amazing bounce, amazing close. However, we have made lower lows and lower highs. But rather than looking at the current downtrend, I want to take a look at the previous pivot points, like right here. So this is the low point that we saw from that negative 5.50% correctional move that we had from mid-December to mid-January. And if you take a look at the low that was made last Friday and compare these two to the RSI, you see something very interesting. So we have a very clear uptrend, right, in this pivot low point. So we have a nice ascending support trend line that could be forming here. However, if you compare this to the RSI down below, we see something a bit concerning. All right, so what we're seeing here is a descending support on the RSI, or basically lower lows on the RSI. So we have a higher low pivot point trend, right, on the actual price action, but we have a lower low trend on the RSI. So this is what we like to call a bearish divergence. All right, so obviously, yes, last Friday's bounce was amazing. We had a nice higher high pivot point compared to this previous pivot point, giving us this potential ascending support trend line, but we need to read in between the lines, especially when we're looking at a very important technical lagging indicator, the RSI. Right? So this relative strength index is clearly telling us that, hey, even though we did have a good bounce last Friday, there's still that underlying trend to the downside. So we must not forget that. Now, even without the RSI, all right, we can still tell on the daily time frame, on the weekly time frame, on the monthly time frame that yes, we're starting a new corrective move, or at least a downtrend, because, well, just take a look at my SMAs that are closely following the price. The daily 10 has officially crossed below the weekly 21 SMA, giving us that official short-term bearish crossover, confirming that yes, indeed, we are in a bearish downtrend until the price is able to get back over both of these two short-term SMAs. But on top of that, okay, if you take a look at last week's price action on the daily 50 SMA, we have completely flipped this daily 50 SMA as an area of important SMA support into a major SMA resistance. So last Thursday, last Wednesday, or even on Monday's price action, we have used this area of SMA as a huge significant area of supply, allowing sellers to continuously reject the price whenever we retested this daily 50 SMA. And so these rejections, especially on Wednesday and Thursday, are clear indications that sellers are still fully in control of the current underlying trend, right? And again, we need to read in between the lines here. And so we have a lot of converging indications that still point the price trend to the downside. So I do not want you guys to forget about this, even though we may be seeing a continued bounce into early this week. So from a daily time frame perspective, if you were to reach this psychological $600 level, that means we will for a brief time possibly come back to retest this daily 50 SMA and possibly even pop right back over it in order to retest this $600 psychological level. Now, in the perfect world, I would love to see the daily 10 SMA converging, okay, on top of this $600 psychological level and literally coinciding with this level so that the price can actually retest this level alongside with the daily 10 SMA, which is now curling downward and trying to catch up to the price as it has moved very rapidly to the downside. Okay, so now in order to tie all of this in together, we also have the VIX. All right, so the VIX was staying very stubbornly bullish from a candlestick chart pattern wise, and the VIX was really just staying bid for all of last week. Now, I've talked about this already, but VIX has been trying to stay away from the current lows that we've been seeing since last year and even last year of between that value of 12 to around 14, or you could just even say 12 to 13 if you don't like the wide ranges, right? And so it's been like as if the VIX is kind of allergic to this 12 to 14 or 12 to 13 range for most of this year, and has rather found a more preferable range between I would say 15 to around 17. And so that is awfully close to that corrective value of 20 and above. And so all of last week, we just continued to move straight up ever since February's OPEC date. And we just continued to try to stick around this 20 value, right, on the VIX. So again, market vol is still very much elevated and will continue to stay elevated as long as the VIX continues to try to stick around this 20 value and also make higher highs and higher lows, which is completely opposite to what the S&P 500 was doing all of last week. Okay, so again, we're going to see a lot of violent bounces and a lot of violent rejections, creating these very, very wide price ranges. So I really want you guys to be cautious heading into March, but at the same time, there are a lot of opportunities, especially if you guys are scalping or day trading or even overnight swing trading as well. All right, so with that being said, let's take a look at our first trade idea for this trading week. Okay, so Disney, right? DIS, ticker symbol DIS. So I have first taken a look at this name last year, and this one had an amazing reaction to earnings to the upside, and it has continued to hold very, very well after its earnings gap up. Now, obviously, this earnings happened in November, but even with the most recent earnings, it's been able to hold a very nice area of demand underneath this gap up area. Now, what has actually caught my attention to this name this first trading week of March is that compared to all the other tickers that have been able to gap up after earnings, this one has been able to uphold the gap up area compared to the others that have not been able to do that, right? So if you take a look at tech leaders or even software names, they have not been able to hold the gap up and has completely, right? They all have completely filled in those gap up areas, which indicate a lot of weakness, a lot of relative weakness in their own group, or even just as an individual tech leader or name. So, this indication of Disney telling us that, hey, there's a lot of relative strength compared to relative weakness amongst those tickers that have completely filled in their gaps. Disney is kind of a standalone name here with this relative strength. So what we're seeing here on the daily time frame is a very, very good and potentially forming double bottom chart pattern, or we like to call it a sideways W chart pattern. So let me even demonstrate it for you guys. All right, so this is essentially what we could be potentially seeing in the next couple of weeks for Disney. All right, this very nice W or double bottom chart pattern. Again, a sideways W chart pattern if you guys want to be a bit more specific. So we have this nice ascending support trend line where the RSI is also showing a very similar pattern here with higher highs and higher lows. Excuse me, higher lows only, right? So as the price continues to consolidate, we're still seeing a convergence of the RSI and the price action itself with these higher lows. Okay, so that's very, very good to see. Now, when we take a look at last Friday's price action, we had a very good breakout over this this resistance level sitting at $113. So this is the resistance level that has been formed as the price has continued to consolidate and move sideways. And so even if the price hasn't really gone anywhere since that November gap up from earnings, this is a very good demonstration of relative strength during a very hectic week, well, since the past 2 weeks, since February's OPEC date. So Disney continues to hold this relative strength, and especially all of last week, it barely budged to the downside compared to all the other names that have been affected by the overall market action. So Disney is one of those names that you really want to be looking out for when the market decides to go back in an uptrend, or at least show more relative strength, because Disney can be actually uplifted even further to the upside if the market continues to move to the upside once more. Right, so Disney will be a name to be looking at, not just for this week as a swing trade idea, but as a name for the next couple of months if the markets decide to pivot back up higher. But then again, even if the markets do not want to pivot back up higher, Disney can still show us and demonstrate this very, very good relative strength price action and continue to move to the upside regardless of what the markets are doing. And so I've given you guys a very simple entry point, either at a long bounce entry point at 113 if we do see a retest at 113, which most likely we will get this week, early this week most likely, or a very simple entry point over the previous high of the day, which was at $113.99 last Friday, and give you guys an entry point over 114 bucks. Okay, very, very simple entry point over the previous high of the day. Okay, and I've also given you guys the full breakdown of the 3-point game plan on Disney in the report itself, alongside with the option contracts that I will be looking to use on this swing trade idea for this week. So make sure you guys read the report itself. Alright, so that is it for this video. If this technical analysis video was very insightful and most importantly applicable, make sure you guys smash that like button down below. And if you're new here and you aren't subscribed to the channel, make sure you guys hit that subscribe button as well. And also, if you are watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing that you need to do is become one of the many readers of the CFO Swinger Watch Report, which will automatically give you full access to the private CFO Discord community, where you can expedite and further your learning in trading. All you need to do is look at the details in the description box down below. All right, so good luck, and I'll see you all tomorrow morning.